This is Stable Stories, and this is episode 9. So, this is a space that we at the Eco Foundation have been running for a couple months now, where we bring in leaders in the stablecoin space, people who are building really interesting new technology to help bring the world on chain. And we like to do a little bit more of a deep dive than other podcasts do, just to try and get a sense of the real story behind the founding of these companies, behind what's going on at the projects in terms of bringing people on board and challenges they're facing real time. So really just getting kind of the nitty gritty of what it's like building in the stablecoin space today in 2025. I'm really excited for this episode in particular. This is with Dakota, which is a business bank for the digital age. And today we're talking to Ryan Bozarth, who is co-founder and CEO, and Gabe Giselle, who is a founder of Dakota as well. So, hey guys, welcome on.
Appreciate it. Thank you for having us.
Yeah, thanks for having us. Happy to be here.
Awesome. Well, the structure of this space typically is we talk a little bit about some general stablecoin topics and then kind of dive specifically into the project and learn more about the ins and outs of that. But before we get into the general stuff, would love to just get a quick intro from each of you. Would love to hear a little bit about your personal background and what brought you to founding Dakota. So yeah, Ryan, maybe we'll start with you.
Sounds great. A little bit about me. So I spent the last few years here with Dakota. Prior to that, spent some time working across the crypto space, mainly working with and for qualified custodians. So got a chance to kind of think about how we want to build kind of regulated products within this like larger ecosystem. Worked on Coinbase's custody product, on Anchorage's product as well. First got into space actually at kind of or before that, where I spent some time kind of at start really kind of starting to use products like Coinbase to kind of buy your first, Bitcoin or Ethereum, things like that. But then very quickly you kind of see the use of, example, USDC as a core part of that platform and part of those trading pairs. And as you sometimes do when you're in those environments, is you kind of try to encourage your friends and families and others to kind of participate in crypto. And USDC, an example of something that was like very easily natively kind of built into the product and was very easy to kind of encourage other folks that, hey, let me send you a little bit of USDC and get you onto the platform here. And you could buy your first maybe Bitcoin or Ethereum, whatever it might have been back then. And so that was kind of one of the first forays into crypto really was by using some of those products that were really more approachable, easy to use, and using things like stablecoins to encourage others to kind of find their way down the rabbit hole, as many people call it. That's a little about me.
Cool. Yeah, I've spent the last 10 or 15 years just building software kind of across the industry. I would say my interest in crypto kicked off probably 2017, 2018. In terms of the genesis of Dakota, it's actually where Ryan and I, we were both working at Airbnb, and Airbnb has kind of a large internal community of crypto enthusiasts. So I'd say my interest in crypto started then, but I wasn't getting to really build in the space yet. And so when Ryan left his most recent job, we decided to jump into this together based on some pains that he had seen in the industry. Yeah, so I had around that time started like Ryan said, I think Coinbase is probably my first wallet, bought Bitcoin, Litecoin, Ethereum, those things, and then eventually USDC. And actually used USDC for the first time to pay a contractor I was working with on a side project who was based in Europe, and we were trying to figure out how I could pay him with my US bank account. And so that was kind of an unlock moment for me of like, wow, this is actually incredibly useful. This is different than, buying and holding Bitcoin. Stables are kind of making my life easier right now. So that was very cool.
That's awesome. Very cool story of your first time using stablecoins, and interesting to hear kind of both of your genesis of sort of, first forays into buying Bitcoin and Ethereum and how it brought you here today. Um, I would love to hear more next about just the genesis of Dakota itself. Clearly you guys had some experience and interest in the space, and then what kind of, compelling customer problems or led you to found Dakota and really double down on what you guys are building?
Yeah, I can start with this one. So Dakota has been around for about 2.5 years now. It kind of came out of this idea when I was at Coinbase Custody, was leading that division. And so we spent a lot of time talking to customers, especially throughout the kind of sales process and joining the sales team, many calls, and hearing that there were not just the people we intended for that product to serve, which was primarily institutions, both kind of crypto forward and not, but things like, VCs, hedge funds, asset managers, and the like, who were jumping on these calls. But you also had businesses who were kind of coming on, asking about custody, asking about if we could support things that I would describe at the time as like financial operations or kind of treasury management, not really the kind of intention of these kind of larger qualified custodians. They're really more meant for kind of certain strategies you might implement, whether it's kind of long hold if you're a VC, or some more active management if you're a hedge fund, but kind of clearly built for financial service companies as opposed to your everyday business. And so that tended to be this thing that came up over and over again, which after you hear that a handful of times, your ears start to perk up a little bit. And you say, like, I wonder what it would look like if we could kind of reimagine or kind of build this thing. But this time, as opposed to building it for financial service companies, which has its own market, its own set of needs, own kind of product shape to it, that we built it for like businesses. And so that kind of got us started on this idea of like, what would it mean to build that? And the idea of like business banking, but this time being closely integrated with crypto. And that definitely evolved over the kind of first year or so, the company's life cycle, how much to kind of invest into the banking side versus the crypto side, where these technologies tend to be good at things, and how we want to display it to the user, the kind of layer of abstraction you want to provide or not, things along those lines. But the real kind of like early unlock, I'd say, is sitting in a lot of those calls with customers where we had businesses asking about the product that we had built for institutions. And then also, quite frankly, you saw, even at that time, this kind of wave of growth with stablecoin adoption. And so what you saw, that growth was primarily driven by one of two things, or actually both of these things, but kind of broken into two buckets. One was that it was used within crypto, so usually within DeFi, as a pegged asset. So incredibly valuable when you are trading or lending or borrowing, having this pegged asset. And so for people who are crypto native, there was a huge amount of value for a stable coin or stable currency. But the other thing I really saw was that it was effectively an export of the US dollar. As you saw things like USDC and USDT being used to get access to dollars in parts of the world where it traditionally has been hard to get access to them. And so sitting in those calls, seeing those waves, you tend to ask yourselves the question, if we're exporting the US dollar, like what would it look like to export the US bank account? And so the earliest ideas on Dakota were really built on kind of those two ideas.
Awesome. And well, one thing you touched on that I would love to dive a bit deeper into is some of the decisions you made around kind of like focusing on the banking side versus the crypto side. Now, I am a very happy Dakota user. I'm a huge fan of you guys' product. And I think what you've done is very unique. And what you've built, in terms of, I think I could give this product to anybody I know who works in, finance or traditional tech, and they could just go ahead and get started really quickly using it, kind of like any B2B SaaS product. And but it integrates crypto really smartly in a way that, as someone who's crypto native, I kind of can see what's happening behind the scenes and I can do what I need to do on chain using an interface that is very sort of Web 2 native. So I would love to hear a bit more about kind of some of those decisions you made in the early days of banking versus crypto and how to integrate things, because I think you guys have done it in a way that's pretty unique that I don't often see from products that are more crypto native.
I can start with this one too. So I'll just add a couple here. Like, so one that we thought a lot about in the early days was trying to like take a very, uh, for lack of a better word, like principled approach around like what these two technologies were good at. Crypto has a suite of things that it's very good at, some kind of value properties that we tend to really think very highly of, things like transparency, be able to verify things, the like. And then also there's a reality where I think the traditional system in many ways is kind of broken, but also it does do some other things really well. It is universal and people have, in many cases, been used to operating in this world. And so you can get a lot of value off of integrating closely with things like wires and ACH and Swift and SEPA. And many cases, those are the preferred kind of payment rails. And then you can kind of bring people along the journey to bring them more into, I'll call it like a more idyllic state where they're using kind of crypto and staying on chain more often. But kind of thinking in the beginning, being like, what are these two technologies very good at, and how do we leverage that? So let's give you maybe one or two examples here. So within Dakota, we treat payment rails, things like Fedwire, things like ACH, and direct kind of crypto deposits like sends and receive, all as first-class citizens. So you're able to operate across these things. You can send in crypto directly to Dakota. You can send it back out, but you can also send in things like dollars and euros as well. And we try to abstract away a lot of the complexities to make some of those things happen. But for example, within Dakota, you have integrated crypto wallets as part of each account. So each account by default has its own segregated on-chain wallet that we are using to hold the funds, whether it's in our own stablecoin or something else. And the idea behind that address was that it allowed you to keep that property of transparency, be able to verify where your assets were because you could see things directly on the chain, as opposed to holding them in an omnibus wallet, for example, or some other kind of form factor. And so like being able to say, hey, not everyone is going to know how to use a block explorer and do all these things that maybe the crypto natives might, but the crypto natives will appreciate this. And we, more importantly, as a company, will be able to say, yes, we stand behind the idea of being transparent, being able to verify where your funds are, and those properties just happen to come from, in this case, the crypto side of the technology stack. So those types of decisions were at least ideas to say, hey, let's make it approachable for as many folks as possible, as you mentioned, but let's make sure that we are not losing what makes kind of crypto great and that technology really useful for folks. So whether you're treating it as a payment rail alongside some more traditional ones or relying on a segregated address structure, those allowed us to kind of make sure that we were kind of riding that balance. And quite frankly, this is something we kind of spent a lot of time on even today, and we're always trying to figure out what is the right balance, whether it's the layer abstraction or the way we build new features.
It's actually really cool to be in a market that is changing so fast and adoption is changing so fast, and the education gap is shrinking so quickly on stablecoins kind of for the general public. And so it is something that we talk about regularly in terms of how do we walk the line, what crypto functionality can we expose, but in a way that people are comfortable with. And then, hey, like the educational gap is shrinking. And so like, basically, how can we marry the expectations of the previous generation of financial products with the things that are enabled through crypto? So yeah, we talk about it regularly, and kind of the idea is to continually drive the product toward that perfect balance.
Very cool. And as you talk about the educational gap shrinking, I'm sure, of course, Circle's IPO recently and just sort of general awareness of stablecoins and more traditional institutions coming to the space is moving the needle on that for you guys. But I'm just curious, on like a 6 month to 1 year sort of time horizon, looking back, what have you guys seen change in, perhaps customer or partner behavior on this front that maybe changes how you think about building or sort of abstracting away some of the features? Would love for you to just dive into like what you are seeing specifically with that educational gap shrinking and how it's changing things.
Well, I can speak a little bit to it first. I think in the early days, like the idea when Ryan talked about sort of the architecture of our platform, right, where you have segregated crypto addresses under the hood, but then you are enabling financial rails on top of them. I think pitching that to a customer a year ago felt very different than it does now, because general familiarity and comfort with something like USDC or USDT, sort of stablecoins that are pegged to the US dollar, are more familiar to people. And so when somebody comes in the door and they say, hey, what I really want is I need to be able to really quickly send Fed wires or Swift payments internationally. They need to access these traditional financial rails. It may have a year or two ago given pause to be like, wait, so how are you actually enabling this? What's happening behind the scenes? Nowadays, I think that is much more familiar to people, and they view crypto as a tool to solve these problems for them because they are more and more familiar with, hey, yeah, like I am aware of, the Circle IPO, right? I'm more aware of USDC. I'm more aware of stablecoins in general. And so it makes our architecture less foreign and a little bit more familiar as sort of a set of tools that lets us just build better financial services.
Yeah, 100%. Maybe to add a couple other pieces here. So we see it's pretty unique to be able to kind of talk to a bunch of customers on a weekly basis and kind of hear how they think about and how they have evolved in many ways and how they kind of view stablecoins over this last year plus or so. To give a couple examples, we talk to folks that are in the nonprofit space that are using today stablecoins as a way of accepting donations. That comes up more and more as you see this broader awareness around stablecoins. You have regulatory clarity, things like happening in the Genius Act, that they get more comfortable with saying, hey, I can actually open up to new markets and support just another payment method in their eyes by accepting stablecoins directly, but alongside, dollars or euros or the foreign payments that they're more traditionally used to. And on the other side of which is newer, but it's starting to come up more and more recently, is that they're viewing stablecoins. Once they've accepted it, they oftentimes hold on to it. They might kind of turn it into dollars, but they also might have a stablecoin balance. And they're starting to realize that they can use stablecoins to kind of get to hard to reach areas where a lot of these nonprofits are operating in areas where there's not a great traditional financial system. And so stablecoins more and more are kind of being seen as a way to get value or the funds kind of needed where they're operating. And so that's been pretty amazing to see. Another kind of industry specific example has been import export companies, which probably is less of a surprise to folks that by design, they're kind of moving money around the world globally, and they have vendors in one place and customers in the other. And so they have started as an industry to start to adopt stablecoins. And in many cases, because this kind of relatively small network of customers and vendors all have similar pain points, they're able to kind of bring on more and more of their own customers or their vendors. And so people start to operate stablecoins more often. The other way we see it happen is through what is often called stablecoin sandwich. We won't say this term too many times throughout this call, I promise. But the idea that you can just move money around the world much faster if you're going to accept dollars on one side, let's say from somewhere simply in the US or South America even, and then kind of say, hey, I want to get euros on the other somewhere in Europe. And so you can just move that money much faster by converting it to stablecoins, skipping the correspondent bank network in this case, and converting it back to a euro in that last mile. And so we see that activity as well, where it's still the use of stablecoins, but it's more under the hood. And then lastly, I'd say, as we see kind of more global businesses becoming kind of the default, whether that means you have remote work, you have contractors, so other parts of the world, customers or vendors in parts of the world, you're starting to see stablecoins used as a kind of payout method more and more directly. And so the classic example here is going to be contractors, where you have an individual you need to pay, they're located somewhere else, and a lot of times it can be easier just to pay them directly in stablecoins. And a lot of the last mile stuff is starting to be solved depending on where exactly they're located. So those may be a few examples of the stuff that we see these days. And a lot of these have either kind of come to light in the last year and a half or so in terms of like broader adoption, or they're just things where you're starting to see much, much more activity than we have in the past.
Got it. Very cool. Yeah, thank you for those industry examples. Those definitely bring it to light. And it's really interesting, in particular, to hear on kind of the nonprofit side and nonprofits in other jurisdictions and the benefit there. That's one I hadn't heard, highlighted quite as much. Cool. I want to shift gears now. We've talked a little bit about Dakota and the product and kind of your genesis story. I would love to talk a bit about DKUSD because you, of course, have your own stablecoin that users can hold within the app. And so I would love to talk a bit about just Dakota stablecoin, give a bit of a rundown of it, and tell us how it benefits users of the Dakota app.
Yeah, of course. So Dakota stablecoin, or we kind of call DKUSD internally, is a stablecoin that we describe as an on-platform stablecoin. What that means is that it only can be held on Dakota. If it's ever kind of moved off the platform, there is no market for it. There's no way to exchange it for anything else. It's not liquid in that sense. And so it has a lot of value both to us and to our customers, but the part of that value is derived because it has a very kind of scoped use case. And so as an example, and for a little context here, when you send in like a dollar or a euro into the platform through let's say a wire or ACH payment on Dakota, we're going to automatically sweep that out of the bank account and put that into Treasuries, and then issue you back out a stable coin that represents those Treasuries. And so while you're on the product, you're holding on to this stable coin. The reason that we do that, both for ourselves and our customers, is that there's this one, you get to actually upgrade your counterparty. If you think about a traditional bank account, your counterparty risk is that you are being exposed to the risk of the underlying bank. By instead of holding cash, you're actually holding treasuries, or in this case, these proxies for these treasuries. You're actually starting to face, in this case, the federal government. So as many people know, US treasuries are a loan from the government. And so you went from oftentimes working or facing as a counterparty your local a regional bank or community bank to what I would argue is probably the best counterparty in the entire world, which is the US government. And so in addition to that, we also earn interest income off of the treasuries that are being held, as opposed to the cash in the bank generally earns a very small amount of interest. And so we can build rewards programs similar to how Coinbase might treat USDC, and be able to say, we can now build these programs and fund these programs with a marketing budget that is kind of derived from the interest income off of these assets. And so if you look at Dakota, for example, you can say, hey, you can earn 3.5% by holding assets with us. And that 3.5% is going to come from the interest income that we have there. On the risk side of the equation, it allows us to say that we have a lot of control through our issuer of DKUSD around when and how it can be used. A big component of that, it can't leave the platform. And so it really does mitigate a lot of the kind of downside risks of operating a stablecoins, including the idea that in theory, these things can be depegged. By not having it be exchange traded, you cannot depeg it. There is no way to depeg the asset. And so those kind of properties are really what got us attracted to it. And as we go forward, you think about converting cash into a more kind of technology, stablecoins kind of represent an underlying asset, that we're basically converting a financial instrument like cash into a technology one like a stablecoin. You can then build a pretty unique set of features because now you're holding on to this technical instrument. So one quick one is going to be, if you're holding on to a stablecoin at Dakota and we have bank partners all over the world, let's say I'm sitting here in the US, I want to move money to Europe. In the traditional system, that cash is going to go from the first bank that I have a bank account at through kind of usually 2 or even 3 correspondent banks before it arrives in Europe, is converted into a euro. And that's generally one of the reasons why it takes so long, can be expensive, et cetera. By holding onto a stablecoin in your account instead, we can run the stablecoin of the crypto rails all the way to the last mile and effectively skip that correspondent bank network. So in that same example, if I'm sitting here in California, I can say there is a payment I'd like to make to a vendor, or let's call them a law firm in Europe. I can run a Dakota on stablecoin rails all the way to the front door of our bank partner in Europe and swap it at that moment from a stablecoin into a euro. That leg of the transaction might only take what's called the speed of the blockchain, so less than a minute. And then at that point, I can run SEPA Instant, which is a kind of local payment network in Europe that is in real time, and deposit it in the recipient's account back to that law firm again in, let's call it, 5 to 10 minutes. So all of a sudden, a cross-border multi-currency transaction went from taking 3 to 5 days and costing you a few percentage points to being a fraction of a percent and happening effectively in real time or less than 10 minutes.
Yeah, just awesome. That's so cool. And really goes back to what we were talking about earlier with kind of you guys combining the banking and the crypto side and taking the best of both worlds and making a really fantastic flow that makes things much easier for the user. Now, we're just a few minutes from the top of the hour. So as we move towards closing out, we talked earlier about how much things have evolved in the last couple of years with, of course, the educational gap on stablecoins shrinking, with, the Genius Act, of course, as hot off the press. As we sit here in 2025 and you guys being heads down building at Dakota, what's the hardest thing building in the stablecoin space today? Whether it's something that a challenge that lags from earlier or something new that's popped up, what are you guys finding is a challenge as builders day in and day out sitting here in 2025?
I'll take back one of these. So I'll say a couple things that are still, I think, more difficult than people realize. I think people realize that there is like a certain amount of difficulty here that is inherent with like the product space and things like that. I think we're getting a lot more improvements on the regulatory uncertainty, but that's still probably one of the biggest pieces. So I don't want to gloss over that one. Even the Stablecoin Act and Genius Act that we see today and the improvements there, they're massive, but we still have a little bit of ways to go to kind of get more kind of a broad understanding of how these things will actually impact the market and will actually be required in there. So that's a piece of it. Not to lie, I think 2 years ago that would have been the full answer. These days, I think we see a huge amount of improvements in infrastructure products coming to market, but there's still pieces of it that remain kind of relatively complex. I think custody in general is one of those areas where there's still a lot of work that can be done to improve these new types of flows. If you think about how we've built, in many kind of cases, wallets historically, they weren't really designed for kind of high throughput. They weren't designed for these use cases because, quite frankly, these use cases haven't been around that long. At least we haven't used them in that way. And so a lot of the wallets are really good at kind of secure storage, assets sitting idle, things along those lines. And in some cases, kind of working well with like trading platforms and things like that. But a lot of them are designed for kind of financial operations. And so like as we kind of think through the Dakota product, a lot of time is spent on how we kind of can make sure that the deposit or the storage layer can kind of be at the right caliber and right user experience that we would expect alongside some of the other infrastructure products that maybe are a little further along. Let me pause there. Hand over to Gabe.
Yeah, I was just going to add, I feel like one of the tough parts is we kind of see what is available when you run financial payments on crypto rails, but so much of the existing world and even, our customers, the people they're paying, so much of the existing financial ecosystem is on the last generation's rails. And so I would say that's kind of a pain point because we'll have customers who the only way they have to pay a bill is through a Swift transaction, which takes, 3 to 5 business days. And for us, there is still the need to integrate with that system, which is imperfect, which is legacy, rather than like, oh my gosh, if your vendor that you're paying could just accept a stablecoin, this whole world will be so much simpler. So we're still at this kind of transitional period as the adoption is growing of stables, that we have to walk the line of like, yeah, we can build on this new technology, we can operate on stables, but we still have to integrate with the legacy financial systems, which is quite painful, and cannot wait for that to go away.
Yeah, I think that's right. You know what? I feel like in the stablecoin space, there's so much focus on and off ramping, which of course in today's world is super important because we are in that world where, we bridge back and forth so often. But like you, I do look forward to a day when on and off ramping, becomes less of an acute pain point because there is just so much you can do on chain and so many vendors, who are accepting stablecoins. And we'll get there, but for in the meantime, we we live in this best of two worlds, I suppose.
Absolutely.
Awesome. Well, we are just at the top of the hour. Before we drop, any last words you guys want to share, and anywhere that you can send folks if they want to learn more about Dakota?
Yeah, I'll say well, this has been great. Appreciate you having us. But I say for Dakota, you can find us Dakota.xyz. That's the website. Folks that are interested in an account, they can kind of sign up right away. It's all self-serve. Looking to get a hold of me, I'm here on X, formerly Twitter. You can see the handle, and looking forward to chatting more with y'all.
Yeah, thank you so much for having us.
Awesome. Thanks again, Ryan and Gabe. Have a good afternoon, everyone.